Okay, good morning, traders. Welcome to this live intraday strategy webinar. Today is Thursday, September 2nd, just getting into the thick of things. Mike Boutros with you on the horn. Hey, Aurelian, Jay, everyone in the room, good to see you guys. It's been a quiet week. Non-farm payrolls are on tap, and it's early in the month. So if you've been struggling to find some opportunities, you've been struggling to find some decent moves, I don't blame you. Market environment right now isn't the best, but we certainly are opening the month at some really nice key levels. So we have non-farm payrolls, like I said, on tap tomorrow. 750 is the clip expected. Unemployment, I should say, is expected to drop to 5.2% from 5.4. With everything we've been getting from the Fed, like I said in yesterday's webinar, guys, we had a lot of live presentations this week. By the way, we're right back on tap next week. Monday, obviously, is a holiday here in the US, but our Tuesday and Thursday webinars are back online. So hopefully we get some sort of kick tomorrow, some sort of vol tomorrow to kind of clear things up. But on the menu for today, we'll hit all the levels: DXY, Euro, Kiwi, crude, dollar, yen. I do want to give you a point on Bitcoin. Did break higher from that near-term formation we've been following. Dollar CAD, sterling, and Aussie dollar. Any other levels or trade setups you want to review? Feel free to throw them on the message board at any time. All right, so let's jump right in. Here is what DXY looked like as we were entering the week. We had already made a pretty nice dip and test of that 618 retracement, somewhere in the range of 92.50. The weekly opening range is essentially preserved. Oh, I'm out of order here. Let me show you DXY first on the weekly chart. So we've been talking about the pullback and whether this correction has more to go. It's the same setup since Monday. Okay, you can still imagine a scenario where it drives down deeper before you start to find a little bit more support for an uptrend bounce. As it stands right now, weekly momentum failed at 60, and then we just turned lower. You failed at the objective yearly range highs, and you completed two equal legs off the high. We missed that by like 3 pips. So it's in a very precarious situation as we start off the month. Here's what it looks like on the daily chart. It's been 3 days of consecutive declines. Yesterday wasn't an outside candle, but it did cover the entire previous day's range at one point, and here we are again. Long story short, it's looking tired. It's looking tired. Ideal scenario, again, not a trade recommendation, is my personal sort of assumption. Ideal scenario tomorrow is that you get another drive lower, and that's the exhaustion point. If tomorrow just rips and rallies, I would still actually be cautious of looking for follow through on that. Here's what the intraday chart looks like. It's essentially unchanged, okay, since earlier in the week. So we made a rebound, again, failed at the objective opening range highs for the weeks. We talked about that yesterday, and here we are moving lower. You know, there's nothing to do here on the short side. So if we do dip 38.2 retracement off the low, and this is from the low that we made back, what was that, in May, 100% extension off the high, that gives you 91.11 into 92.11 into 92.25. That's sort of a sweet spot for me. Bullish inval for the broader trade is still down there at the weekly chart. This level right here, 91.74. Those lows that we made from September, or was that August of last year? So in a very tight stance to open up as we head into non-farm payroll. Again, be mindful of downside exhaustion. If the rally materializes and we do crack higher, look for a break above that 38.2 to sort of give you the turnaround. Again, this would be an objective range break of the weekly opening range if we just clear 92.78. But add that 38.2 in there, gives you a little bit more conviction on a breach. Unfortunately, kind of boring. Still looking for some moves here. And you'll see a lot of the setups we're going to go over, except for the commodity pairs. Those are the ones that actually gave us a little bit more play. Here's what Euro looked like. And here's what I gave you guys last night. So advance does look a little tired, as I said, but the breakout was a breakout. And we're still looking for the same exact trade that we're talking about with the DXY. Possible topside resistance, topside exhaustion, 1866. 1850, 1894. Both levels I'd love to see. Again, a scenario tomorrow. If you get a dollar washout, those are your top two levels. Weekly open support steady at 1794. That's what you would need to break to at least turn the near-term focus lower, bullish inval at the low we close. So it's been tight. It's been tight. And again, you know, this whole thing with, I've had so many discussions this week, interesting discussions with various traders across the cities, just buddies of mine. And you know, the inflation story, that's the argument that's being posed on both sides, is I just see holes all over the place. If it's not transitory, guys, and it is a faster, longer run inflationary story, A, the Fed's already behind the ball, and B, you know, there's more liquidity coming down the pipeline fiscally. So even if they do think that's maybe transitory, you're about to get a whole other dump of cash. And it's hard for me to see how the employment data, outside a big upset, and let's be clear, we did get ADP employment numbers yesterday that were pretty weak, almost half consensus. Now, again, they're correlated, but not too, there's breaks in those correlations all the time. ADP is notorious for missing larger swings in non-farm payrolls, so keep that in mind. But 750 is the clip we're expecting. If you get a real big discount on that, people are going to start saying, whoa, well, the Fed is going to have to, you know, chill back with that normalization policy. That could be the dollar washout, in my humble opinion, that you might need to push the dollar down one more time. It's already been beaten. That would be sort of the terminus somebody looking for near 1895 if we get the pop higher. Remember, euro on the weekly, the big resistance is at 38.2, again, 1895. The median line is just ahead of that. So even intra-week, if we go for a stab at the median line, this region, be cautious on the long side into 1894. That is 1 and 2. Any questions on euro? A quick look at yields before we move on to the other crosses, right? We've been talking about this, not on the weekly chart, but we've been talking about the ping pong nature of this balance in yields, right? Right between support and resistance. So same level. Yesterday couldn't manage a close above the median line here, and we actually closed lower on this session. Continues to put this focus on this mini range right above 279, 127.90, excuse me. So again, looking for a washout, for a break here in sentiment to maybe offer some clarity on that. Number 4 here is New Zealand dollar. So New Zealand dollar continued to climb higher. We're nearing resistance now. Here's the levels that we talked about. First, I want to talk about really quick is the weekly chart. This is pretty big. If this weekly chart materializes up here, this might be a way more significant low. Remember, the low materialized pips off the 100% extension. So if it is corrective, that's where we want to find a low, 67.95. The low materialized 68.05, 10 pips off. Here's the reversal. We've now pivoted back above the 52-week moving average. Former slope support, resistance last week. Looks like we just broke it back above it again. Last month's highs are being challenged right now. The 618 of the drop from the high that we made just in May of this year gives you 71.21. Looking for a reaction there. That's from the weekly chart, 1,000 feet up. Watch the close on this. Here's what Kiwi looks like on the daily. Today's going to be the, 5th consecutive daily advance if we make it. Here's resistance, 71.21, that 618 we just highlighted on the weekly charts from the May drop. Right now, you also have the 2018 objective yearly open. And again, there's nothing special about 2018 per se, but that level, again, has been a major pivot in price. You can even look back previous to this. Resistance, breakthrough, acceleration, very low tolerance area. Breakthrough, acceleration, resistance, breakthrough, support, acceleration, resistance. We're there now. Okay. Momentum is at its highest level that it's been since the April highs, the April-May highs right here. So we're paying attention. Again, the exhaustion is really the risk. Can't keep chasing the upside forever here. Last month's high. Watch this region. Okay, 70.94 into 71.21 right here. Here's the near-term chart looks like. And again, here's what it looked like yesterday. So we've now pushed and extended into this region, looking for inflection here. If 71.21 gives out tomorrow, there's a whole bunch of slope, but the bigger lateral level is 71.89, 72. Okay, that's the 618 of the yearly range, not the May drop, the yearly range. And then this is the objective yearly open, both massively critical levels on this part for the Kiwi rally. First things first, though, we're at resistance like right here. And again, I didn't want to put this on the report yesterday because I didn't want to get chart to get too cluttered. But if you take that parallel and extend it to the high, it just gives you some time value to some of the levels that we're looking at on the upside. So 71.50 would be slope, 71.70 is possible, but this is really the big region if we cap. Immediate focus, like I said, is still for possible exhaustion right here into this high tomorrow. And that's Kiwi dollar. Similar scenario, similar stance that we're looking at across these majors. The last one I wanted to give you from last night's update was crude. And I think in sort of fair play here with all the commodities, this is also testing pretty big major resistance. So is gold, so is silver. But here's crude. The 50% of the drop is 69.33. Here's crude on the weekly chart. Let me just take a quick view across the board here. Former slope support, 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 break, resistance. We're still there at resistance. We talked about this at length in the webinar yesterday. I hope you guys caught me on daily effects, but this is still the major pivot that we're focused on, right around that 65, 66 level. And we're still probing resistance. So the weekly chart really begs for a close above that slope to validate sort of the resumptive move here in crude. Again, a trade that's made 2 equal legs off the high. This is pretty big, and your first major lateral level of resistance. Again, here's the daily chart, basic 50. Got those former swing lows. If we crack this, 618 retracement comes in at 71.13. Near term looks like this. Weekly opening range is preserved. Again, upset that little spill that we got yesterday, which kind of ducked, right down below the weekly opening range and came right back. Here's your weekly open, guys. We're fractionally higher. So very tight range. Again, I like the long side of crude, generally speaking. I want to stay constructive above 66.14 if possible, even if this cracks lower. I really don't want anything beyond that. But we'll put, I guess, let me take a step back. Ideal area for support if we dip lower, bullish inval is going to be at those lows from back here in July. Top side, 71.13. Now we don't have too much, conviction on this pitchfork yet off the low, high, low. But so far, it would suggest and it highlights the same levels that we want to be looking at from the lateral standpoint. So that's your breakout zone, crude, any way you slice it. Okay, that's everything from yesterday's update. Let's take a look at the previous update on dollar yen. I know some of you are trading this thing. And if you have, it's been frustrating. I haven't touched it in a while, but here's, what dollar yen looks like on whole. It's been a chop fest, right? Here's what dollar yen looks like on the weekly charts. Not much to write home about. You've been straddling that 2019 open. I don't know what you want to do with this, guys. It's just a mess. The only thing that seemed like it had some merit was looking at this sort of on the closer term. It looked like it's in a consolidation. That breakout yesterday was a fake out, but still continues to cast sort of focus on a breakout of this consolidation. The lateral levels are clear as day, to be quite honest. 109.67, that hasn't changed. That's the 2019 open that we're just looking at on the weekly chart, but it's also the 100-day moving average. That's key support. Resistance 110.52, that's the breakout level. Okay, in fact, you have your high day reversal close from last month right ahead of that, right at 110.40. It's actually where we capped out yesterday. But this is sort of your breakout zone for the resumptive move. Until we clear this, guys, I think you wait it out. Momentum is literally flatlining at 50. So again, knowing where to look is one of the most important things to do. And right now, I don't think there's a move here for us, but this is the consolidation I was telling you about. So basic trendline resistance off the highs, okay, a little bit of a smudge there, but fine. Here's basic trendline resistance off the lows, which is actually offered a 3-point touch. 1, 2, 3. Now converges on 109.68. 110.26 is just last week's high, but there's 110.50, the breakout zone. Look for a break here. Look for a break here. Again, dollar yen, typically very strong reactions to US economic data and moves in yields, generally speaking. So something to take note of. Jay, the 100, you talk about the 618 extension off of this low? Is that where you're scoping out? This? Yup. 110.42. Again, what was the high day close we just talked about? 110.43. Beautiful. Around the high day close. Yes. Magnificent. Yep. So it's there, but the consolidation, the corkscrew continues. Look for a breach above 110.50 for the breakout, close below 109.68 for the breakdown. You know, gunshot to my head, I still think it wants to make another rip before it makes the next move. I don't know what move that's going to be honest with you. On this trade, on the weekly chart, that puts me neutral. But it's good that the levels are mapped out well and they're clearly defined. We just need to clear this godforsaken range. It's like 100 pips. That's a quick look at the abomination. No surprise there. Looking at Bitcoin real quick. This thing just doesn't want to correct. Okay, it has an inability to correct. Everyone loves Bitcoin, and again, dollar yen levels unchanged. And every time you see a near-term correction in Bitcoin, it quickly resolves. So here's the pitchfork we were following off the highs. It continued to highlight near-term support at the April low, 47,000. The ideal drop would have been the 100. Okay, near 45.13, 45.4 actually, something like that. For this sort of just a complete near-term and breakout. 51,000 is still key resistance. We haven't broken 51,000, but certainly it has broken that near-term consolidation. So again, same chart, no change. Okay, we came here, we sat there for a little bit. Here's the breakout, key resistance, still 51,000. So look, this pitchfork now, null and void, right? This extension now, null and void. Brings up your support right back to that April low, and it continues to highlight this 47,000, 51,000 key range in Bitcoin. Not out of the woods yet. And again, it's a constructive trade. No one's arguing that. We just need to be mindful when we're coming into regions of which could offer a pause, could offer a pullback. This very well still could break lower, and all of a sudden everyone's gonna be talking about double tops. That measured move actually gets you right near that level at 42,000 that we were looking at. So long story short, it's a clear-cut range. Respect that what $4,000 range there, which is ridiculous to say when you hear yourself say it, but respect that range between 47,000 and 51. That's what we need to clear for Bitcoin to see the next leg. Now, if we take a look again at the 2018 parallel, it seems to be all but broken. I'm going to give this thing a couple more days, but if 51,000 clears, that's the decoupling that you would need to sort of drop that completely. But till we do, still got a couple of weeks to go, a couple days to go. Questions on Bitcoin? Okay, dollar CAD. Now here's where the actual bigger moves were this week. Not in dollar CAD per se, but in Aussie and Kiwi, which we already covered. Kiwi was that big stretch. Aussie's also making an interesting stretch here. But first is first. Here's dollar CAD. It's been a snooze fest since the start of the week. I suspect you're almost at a weekly doji. It looks pretty darn close. We'll see how this looks tomorrow. But sitting at support, 25.79, just lower. You have upslope support. We've done jack diddly this whole week. Okay, so there's nothing to really look at the weekly chart. We obviously turned from uptrend resistance, trading just above uptrend support. Daily chart looks like this. The weekly opening range is not even given out, but the weekly opening range remains preserved above a 38.2 retracement of the advance off the yearly lows, basic slope support. So a crunch, momentum at 50, flatlining. Nothing to write home about. Intraday chart looks like this. So no change to any of the levels at all. This thing, again, hasn't really done anything. Dollar CAD just continues to sort of sway sideways, lateral, really tight opening range, right above support, guys. Nothing's changed. Ultimately, looking to fade another drop lower, or if we break and close above the objective yearly open, 27.13, I'd look to buy pullbacks above that region for the stretch towards the high day close, January highs and above. But this is support, tight weekly opening range. Again, look for the break. I hate to have not to have a strong bias for you guys, but there's nothing here. We can't force the trade until this thing clears. So once again, we wait for dollar CAD. But when the move happens, as you obviously clearly can see, it's gonna go. It's just in the meantime, don't get chopped up. It's still early in the month. We just setting in the opening ranges for September. Non-farm payrolls are on tap tomorrow. You don't get that CAD employment double whammy that we sometimes get on the employment risk. So it's really going to be more dollar-based event risk into the close of the week. Questions on Loonie, number 7. All right, so the British pound, and then I'll come back to Aussie real quick. Sterling looks like this. Another one where the opening range remains preserved. I've removed the 618 extension just because we've kind of sailed through it a couple times. So I want to set the focus on the objective weekly opening range, which takes a shape right above that 38.2. So again, one of those trades, going to go back to the daily chart. And first, let me show you the weekly chart because this is where our angst is. So remember the rebound off the 52-week moving average just ahead of the median line. Here's the recovery. Here's that long-standing multi-year median line we've been following. Just above is downtrend resistance. So once again, you can envision a scenario if the dollar still needs to wash out where sterling gives you that little bit more of a push to get more inflection off of downtrend resistance before we start to make any decisions on, broader trend trades. Here's what it looks like on the daily chart. Looks awfully corrective. Boom. Actually, you could probably do something like this, which gives you the 100% just higher in this range between 138.30 and 138.59. Something like that. So an area of which if we were to reach would be a little bit more of an interest for that topside exhaustion play, possible entries for sterling. But again, flatlining momentum at 50 ahead of major event risk into the monthly open. This is where a lot of people are going to get suckered in. So there it is, a near-term extension. I'm not sure. I think I took this one off that first wave. So this one is using the sort of initial thrust here, but 38.46. Let's see where this one comes out. Bear with me, guys. You know what? I think we're going to work with this one better. Let's leave that on for now. But you get the picture. A little bit more upside thrust possible if you get the weekly opening range break. That's going to give you the thrust you need. But areas of interest for exhaustion, 38.30 to 38.59. And then the objective monthly open from last month, that would be breakout territory. Anything northbound of 38.90. And we're clear on data for sterling. You did get house prices coming out a little bit stronger than expected, actually across the board in overnight trade, but we're quiet till next week. Okay, last but not least from my list, let me know if you guys have any other questions or trade setups you want to review, is Aussie dollar. And here's where Aussie started off the week. So remember the big fake out, it seemed, insane V type of recovery. Found support at the pivot of which we were trying to hold support on the way down, and here's the thrust higher. Aussie's been just a really very nice stretch through the levels. I mean, you got some inflection, but look at this move. Still suggests that this was a much more significant low. If this pulls back, if the area it's going to pull back from would be 74 into 74.13. You got the 100 off the low, a 38.2 off the high, the September objective range highs from last year, and a really nice area to look for some possible inflection. Even the monthly opening ranges from last month are all sort of loaded right here. Looking for inflection off that mark. Now, if this pulls back towards 73.29, which was our bearish invalid, that was a critical zone. Remember, the monthly open, we could go through it again. Those former swing lows from back in May of 2017, huge pivot in price, the monthly opening range from last month, the monthly opening range lows. We pivoted back above that. If we pull back, that's what needs to hold support. So as it stands now, anything above 73.30 is actually still supported. This was a huge pivot in price. Again, if we look at this from the weekly chart all the way up, that's massive. Massive, massive level. So we essentially cleared a pivot of downtrend support. As long as we hold 73.28, you got to suggest that this got a little bit more upside to go. So I'm cautious. If you're holding longs, watch 74 into 74.13. If we close above that, man, that's like your next fueled leg up. I don't even want to, I don't want to even try to get cute with that. The next level up on the upside would be the June low. That's near 74.76 before that 50% retracement at 75. But looking for inflection right here at these highs in Aussie dollar. Questions on Aussie? Again, if you got caught this week, guys, on some of these, or you missed some of these trades and you've been trying to squeeze yourself into something, I know it's been difficult. I don't blame you. This is the environment we're in. The biggest mistake you can try to do right now is try to force a trade that's not happening. It seems that the commodities, are really the only thing that's been drifting, right? If we take a look at sterling, unch. If you take a look at dollar yen, unch, right? Dollar CAD, unch. We're just range. So the longer the ranges hold, the better the breaks. You have major event risk on tap tomorrow. And again, we're just putting in the September opening ranges. So I think we'll get some decent plays specifically as we get deeper into the month. All right, well, if there are no other questions, we'll go ahead and wrap it up here. I got the whole thing done in a half hour today. Guys, don't forget, Monday's going to be a holiday. So again, as you head into the close of trade tomorrow, lighten up any exposure as you get those thin liquidity conditions heading into the Monday open. And then as markets come online on Tuesday, we'll be back on here with the SB Trade Desk intraday webinar Tuesday and Thursday. Till then, best of luck trading tomorrow, guys. Stay nimble into the NFP print, and I will see you on Tuesday. Have a great weekend. Aurelian, Jay, Steve, everyone in the room, cheers.